every resident under that convention is required to declare all their income that had not, or assets held abroad that were not declared. The scope of the income or assets that's supposed to be declared that was stated in the notice by the URA includes all immovable and movable property that is held abroad by Ugandan residents because of this automatic exchange of information that Uganda is party to. So the impact is that now they are required, you can no longer hide your income, you can no longer hide your assets because the taxman has this information available to them.
They can visit any URA office. They will be given this form, they can fill this form and make their declaration. But filing and declaring this, if you have filled, I would guide you to fill the form, download it from the Exchange of Information link on the URA portal, whether you're an individual or a non-individual. Download it, fill it, take it to 14th floor of the URA tower at the Tax Investigations Office. There is a person who will receive this and help you.
For most of them, the question was, where is this coming from? Is it right? Is it expected of me? Is it a new law? Is it a new expectation? Has it always been there? So the first, I would say, challenge that they've faced is basically background and context. What consideration is going to be made by the tax authorities for the tax that has already been paid on that same income in their home countries? And to the extent that that is taken into consideration, such that we are avoiding the possibility of double taxation, then I like to believe that everyone will be happy to comply with that requirement.
Good afternoon, viewers. Welcome to episode 12 of the Tax Hub podcast. My name is Fatuma Ramadan Nabulia. I am a tax associate at H&G Advocates, and I'm extremely honored to be your host for today's episode. The Tax Hub podcast is a space where tax practitioners, tax consultants, and the Uganda Revenue Authority meet to discuss emerging and topical issues regarding tax. Today's episode is centered around the Uganda Revenue Authority's public notice that was issued in December last year, calling upon all taxpayers to declare all foreign incomes and foreign assets. We as the Tax Hub podcast deemed it fit to bring a panel of esteemed tax practitioners to break down this public notice for us. What exactly does it entail? To whom is it addressed, and what are the consequences of non-compliance? With me today is a panel of esteemed tax practitioners, beginning with Ms. Jackie Aturinda. Jackie, we are very honored to have you here with us.
Thank you very much. Thank you for having me, Fatuma.
You're welcome. For the benefit of our viewers, who is Ms. Aturinda?
Jackie Aturinda. I'm an associate partner with Birungi Barato and Associates, and I've been with the firm for about 15 years.
Once again, we are very honored to have you here with us.
Thank you very much.
To my immediate right is Mr. Edgar Mukasa. Edgar, thank you for honoring our invite. For the benefit of our viewers, could you please tell us who Edgar Mukasa is?
Okay, so thank you, Fatuma. It's an absolute honor to be featured for this episode 12. My name is Edgar Mukasa, and I'm an associate director in the Tax and Regulatory Services Unit at KPMG East Africa, sitting in the Ugandan office. I've been working with a firm straight out of school, 15 years later, still in the tax field. It's been an interesting journey, and I hope that through this conversation, we'll certainly continue to enrich each other from the various experiences.
Thank you very much. And lastly, but by no means least, is a representative from the Uganda Revenue Authority. We as the Tax Hub believe in a fair and balanced discussion, and any discussion regarding tax matters would be incomplete without a representative from the taxman. Mr. Michael Masembe, thank you for joining us.
Thank you, Fatuma, for hosting me, and I'm glad to join the co-panelists in this discussion.
Thank you very much. Could you tell us who Mr. Masembe is?
Yeah, I'm Michael Masembe. I'm a manager, tax outreach at the URA. I joined the URA 15 years ago, first served in the domestic taxes office, strategy, and now tax outreach. I'm glad to be here.
Thank you very much. To kick us off, Ms. Atrinda, we all saw that notice in December last year. There was a lot of talk around town what the public notice was all about. Could you please break down for us and the viewers watching us right now the context, rationale, and legal framework of this public notice?
Thank you very much, Fatuma. The public notice that came out in December last year, it was not coming out for the first time. It first came into place, I think, December 2024. And it was URA asking taxpayers to disclose all their information and all their incomes and assets that they hold in Uganda and also outside Uganda. And this relates to Ugandan residents. The Income Tax Act, to be specific, requires residents to declare all their income from all their geographical sources. So it is not a new thing. It is something that has been in the law. While the Income Tax Act requires residents to declare income from all their geographical sources, world over, there's been an issue of concealing income, concealing assets, and from different jurisdictions. So the OECD brought in place the Convention on Mutual Assistance in Tax Matters. And Uganda is a signatory to that convention. And the law came into force in Uganda, was signed into law in Uganda, effective 1st July 2023. So every resident under that convention is required to declare all their income or assets held abroad that were not declared. Also, financial institutions under the law are required to collect that information and share it automatically with the other signatories to this convention. There are about 150 countries that are signatories to this convention. Uganda is one of them. Kenya is one of them. We have several Ugandans working abroad in Canada, in the US, in the UK. So those are the people that are required to actually comply and declare their assets and income that are earned from those sources.
Thank you very much, Jackie, for that enriching background. Now, picking it up from where Jackie has left off, Edgar, the average Ugandan or the average layperson believes that once they're out of jurisdiction, then they're out of URA's reach, they're out of this government's reach. Could you please break down for us the concept of tax residency?
Okay, so tax residency is an interesting phenomenon because of two aspects. Let me start with the emergence of the digital revolution. The reality is that in the current circumstances in which people do business, you don't necessarily need to be in Uganda to earn revenues or income from Uganda. And this is not even unique to just Uganda. It's a phenomenon that we have globally due to the digital age. So because of that, then across the world, again, as the pressures for domestic revenue mobilizations increase, then the question is, how do we tap into incomes of people who are not sitting in Uganda? And that brings in the first concept of sourcing. So as a person who's not in Uganda, the chances are that, or under the circumstances that you are sourcing incomes from Uganda, then there's an expectation that you're going to have to pay tax on that income in the jurisdiction in which it's been earned, in this case being in Uganda. So that's just to give a bit of context as to the notice that has been issued by the URA. In essence, we are going away from going after bodies, if I may put it, that we are only collecting taxes from people that are present physically in a certain jurisdiction. And we are going after having a business, it's a business presence, if I may call it. Could be physical, but it also could be virtual. When you're looking at it from an individual, to the extent that you've been in Uganda for 183 days during a 12-month period, then you're going to be considered to be resident in Uganda for tax purposes. And like Jackie highlighted, to the extent that you're then resident in Uganda for tax purposes, then it means that we expect to have a portion of the income that you have earned being taxed within Uganda. Similarly, if you spent 122 days in Uganda in a particular year and 2 of the years before that, then in year 3, you will similarly be taken to be resident in Uganda. But we also have people who are present in Uganda through a branch or an extension of their operations. So you find Facebook PLC has a number of people in Uganda forming Facebook Uganda branch. So Facebook Uganda branch will then be considered to be resident in Uganda for tax purposes, and as such should be suffering or contributing to developing Uganda, and that matter pay tax in Uganda. So in essence, residence comes into one, ensure that to the extent that you are or you have a presence in Uganda, then the jurisdiction or the taxes that you're going to be paying will move beyond the Ugandan jurisdiction and also look at that which you have paid outside Uganda.
Thank you very much, Edgar. Our viewers now know that tax residency goes beyond mere physical presence within the borders of Uganda. Mr. Trinda, earlier on, you gave us the background and the scope of this public notice. You informed us that taxpayers are now required to declare all their foreign assets and foreign incomes. Which brings me to our next question. Is it all assets? Is it all incomes? What exactly is the scope of this public notice that was issued by the Uganda Revenue Authority?
The scope of the income or assets that's supposed to be declared that was stated in the notice by the URA includes all immovable and movable property that is held abroad by Ugandan residents. Immovable property includes commercial property, land, houses, commercial buildings. And then you also have things like shares, dividends, royalties that are earned abroad. That's what comprises of the assets and income that is supposed to be declared. Employment income that is earned abroad. We've had a couple of Ugandans also who handle consultancies abroad, and money is paid in those accounts that are held abroad. So those are some of the incomes that are supposed to be declared by the taxpayers.
Thank you very much, Jackie, for that elaboration. Let me bring it back now to Edgar. Mm-hmm. Jackie has described and broken down the different assets that fall under this public notice. Yeah. So the next logical question would be, which persons are affected by this public notice? Is it all taxpayers? Is it everyone within the country? Is it citizens? Is it non-citizens? What is the scope of this public notice with regards to taxpayers and persons?
So thank you, Fatuma. To try and bring it home in line with the context that Jackie shared, I'd put them in 4 broad categories. One is we have persons who are present in Uganda but are earning income from outside Uganda. And again, like she indicated, it could be a consultancy. You could have income in the form of rent. You have properties outside Uganda and you're earning income off those properties that are outside Uganda while you're in Uganda. It could be, and again, coming from, especially when you look at monies and the way monies move, you could have money that has been stashed away in Bermuda and you're earning income from the Bermuda because of the money being there, but then you're sitting here in Uganda. So then that kind of person would have an obligation as far as the taxation of that revenues in Uganda is concerned. The second category, I would put that to be people who are outside Uganda but are earning income from Uganda. And again, to go back to the example, you have Facebook PLC. Facebook PLC has a branch in Uganda, and that branch is through either having a few of their staff coming down to Uganda to ensure that they're monitoring a few of the aspects that they're carrying out in Uganda, some of the customers that they have. So the branch in Uganda will be considered to be a resident here. And for that matter, then the incomes of the branch, Facebook Uganda Limited, will be expected to be suffering tax or subjected to tax in Uganda. The third category would be expatriate staff, our dearest expatriate staff. I have my contract with Facebook PLC, but then Facebook PLC has sent me down to Uganda to monitor and ensure that a few of the activities that they have in Uganda are going according to plan. So my contract is with Facebook PLC in the UK. I have been sent to Uganda, spent 6 months on a 6 months project. For the time that I'll be in Uganda, the 6 months that I'll be in Uganda, the incomes that I'll have earned in Uganda, especially now that I'll be considered to be residents in that particular year of income, then should be subjected to tax in Uganda. Then lastly, which is the fourth category, will be persons who are present in Uganda and have a few alternative sources of income. Again, could be outside Uganda. From time to time, I'll come here, I'll do a piece of work, spend 2-3 months, go out another 2 months, come back in another 2 months. But then at the end of the day, then to the extent that adds up to the 183 days for that year of income, then the revenues that I've earned from both Uganda and outside Uganda will be subjected to tax in Uganda.
Thank you very much for that elaborate discussion. From your discussion, we've been able to pick that the affected persons are not necessarily citizens of this country, but rather tax residents. We've all heard from our esteemed tax practitioners, and as earlier mentioned, the Tax Hub podcast believes in a fair and balanced discussion. Mr. Masembe, our viewers have now understood who exactly is affected by this notice and which incomes are under the scope of this notice. You, as a representative of the taxman, could you please enlighten our viewers what processes and procedures they must follow to comply with this public notice?
Thank you, Fatuma. And I must thank my co-panelists for that elaborate and very, very clear articulation of the regime as we've talked about it. Indeed, when you're looking at anyone's declaration to the Uganda Revenue Authority, I think residency is the first or second question that you're asked, because it determines a lot that goes inside your declaration. And so it's very, very critical that even while the URA had not emphasized this, and we are coming up after the enactment of the mutual agreement, assistance and administrative convention, that implementation, I think it has helped a lot to see that we even out that which hasn't been implemented before. And so it comes back to what is the procedure for one to comply. Now, the scenarios vary, because here we are, where possibly the person that has been declared, because this convention presents us an opportunity to receive information from over 125 countries. And so one of the persons possibly that is being presented to the Uganda Revenue Authority has not registered for tax purposes, doesn't have a TIN. So the first thing they would have to do to comply is to register and get a tax identification number. The other alternative is the person could be registered, but possibly the income and therefore tax declaration for which they must come through to the Uganda Revenue Authority is not indicated on their profile. So ideally, there ought to be an amendment on this person's TIN profile. So first, registration if the person is not registered to have a TIN, and then second, amendment of this person's profile to include that source of income and therefore be able to make a declaration to the Uganda Revenue Authority. But in many of the cases that we have encountered, majority of these persons are registered, and therefore our guidance has been, and the first procedure is that this person goes out to visit the Uganda Revenue Authority website and files a return or an amendment, just in case they had filed a return before, okay? So they indicated in their earlier return to the Uganda Revenue Authority that possibly they only have income from one employer, or let me just put it that way, or income from one source. But then we find out that there is income that they are getting from South Africa. So that amendment has to be made in the tax return. And so that ought to be done. And then, so visiting the Uganda Revenue Authority, URA website, ura.go.ug, log in with your TIN, password, and then file that amended return. And then the other that should follow is for this person to visit the Touchpoint site, touchpoint.ura.go.ug. It's a site where you log in, create an account, log in, and then declare with the documents that this is the income that I have received to support the return that you filed. On the very Uganda Revenue Authority website is a link on exchange of information where you can go and download the form where you declare these assets and incomes. Okay, so we ask you on this form, you will be asked basic information, your name, your TIN, your contact address, and then we will go on to ask you about the assets, okay, the details, the assets, and whatever entails to that asset, and then the income. And then you will indicate to us whether this is being done by you or by one of the experts here that may be assisting you through that process. We need to know that. And then there is that signature to commit at the end. So you download this form, fill it, sign it, and then upload it via Touchpoint. On our part, that would be done. But one thing I need to note is, why is it that this is the best time to talk about this? We are talking about this, like Jackie put it. We get into this 2023. We send out the first public notice 2024. And then 2025 still we send out another, because we see there is a voluntary disclosure window that is closing out. It's the window for declarations where you will have a waiver on penalty and interest for any tax unpaid. That will elapse 30th June 2026, okay? And the waiver only applies for any tax that would have been payable by 30th June 2024. So we think it is very, very critical for our viewers, the clients, both to URA and the clients that are supported by the team here, to look through this and internalize what needs to be declared that may not have been declared unknowingly, possibly, and therefore come through, straighten your tax declaration with the taxman. And I think we will have a good journey going forward. Basically, Fatuma, I think I've touched the areas that one would need to know in their compliance profile rectification with the URA.
Thank you very much, Mr. Masembe, for that step-by-step procedural breakdown. But still with you, Mr. Masembe.
Sure.
What does the viewer back at home watching us, let us say they would like to make the declaration, they want to comply, but then they have challenges with filling in the forms, with uploading the necessary documents. Where exactly do they go for help at the Uganda Revenue Authority? Do they go to their office where do they go to their allocated office? For example, if they're a large taxpayer, do they go to the large taxpayer's office? Or is there a specific desk or office that is specifically designated to help this foreign assets and foreign incomes declaration?
Yeah, you'll forgive me. I put the depth of my thrust on that onto the online declaration, because in December we had many diaspora people coming back to Uganda, and these were the major questions they're asking. And so majority of these are out, and I put my major emphasis on the online. But that hasn't taken away the physical. If one is finding any challenges, they can visit any URA office. They will be given this form. They can fill this form and make their declaration. But filing and declaring this, if you have filled, I would guide you to fill the form, download it from the Exchange of Information link on the URA portal, whether you're an individual or a non-individual. Download it, fill it, take it to 14th floor or the URA tower at the Tax Investigations Office. There is a person who will receive this and help you. But this does not take away our online support platforms. We have the services at ura.go.ug email. You can correspond with us via that platform, and we'll be very glad to give you any information that you may need. The 0800 11 7000 toll-free number is available. We have a WhatsApp chat line, the 0772 14 That number is available. You can chat with anyone if you need any support and guidance. We will be very glad to help you. But that exchange of information link on the URA portal, for a start, gives you all the information that you may need to know about this. And we will be good to go. But any office of the URA will be there to help you. And if you feel challenged by any of the procedures that I've given, possibly and you find it convenient to talk to any of the practitioners that we have here, I know they are seasoned and professional what they do. They may help you, but the first help is available from the Uganda Revenue Authority. The over 3,000 staff would give you all that assistance cost-free.
Thank you very much, Michael, for that 360 guidance. The online platforms, the physical, the toll-frees, the paid-for lines. Surely our viewers will have no excuse should the deadline hit when they've not yet complied with the public notice. Speaking of deadlines, Mr. Masembe, is there a specific timeline within which I'm supposed to make this declaration? And what happens? What is my fate as a taxpayer if I fail to comply with that deadline?
Yes, I spoke to the waiver or penalty and interest that has been around this is the third financial year running.
Yes.
And this waiver of interest and penalty is on to any principal tax that ought have been paid by 30th June 2024. So what we are looking at here is a declaration that one may make, and it would have attracted penalty and interest. But if you make it, because of the waiver that we have right now, that penalty may not apply if it's incomes declared before 30th June 2024. So you have up to June this year to make that rectification, to make that declaration voluntarily to URA, and you will not have to pay the interest in such a case. But the question that you're asking is, what is the timeline? Of course, going forward, there may not be a timeline. Administratively, what we've been looking at has been the 3 years going back. Okay, 3 years going back. It's the declaration that administratively we've looked at. But broadly put, if the URA comes across information that stretches beyond for investigation and other purposes, it may be pursued. Okay, but administratively, we've been looking at the 3 years going back. So my encouragement is, and if you look at it, our first implementation of this is more advisory, is more about engaging. We are more asking people to come through and do right. We don't want to find ourselves in scenarios of applying the distress kind of approaches to getting across this, because tax compliance is a journey of two. We need to be engaging. It shouldn't be a push and shove kind of arrangement. So we are looking at assisting people do right, because majority of the people we've been talking to haven't been aware of this, despite its existence in the tax laws. So we are there and we are glad to assist. Administratively, 3 years going backwards. But anyone who is out there, you have until 30th June to benefit from this, not to pay any interest on anything due by 30th June 2024, and we will have a better journey going forward. Thank you.
Thank you very much once again. We've all heard it from the horse's mouth. The Uganda Revenue Authority is willing to walk this journey with you if you comply by 30th June of this year. Mr. Trinda, we've heard from the taxman. He has told us about the consequences, the procedure and processes of complying with this public notice. Uganda finds itself in an interesting position where majority or a good number of its population goes to source for work abroad, both in very professional spaces and even in the not so formal spaces like the Middle East. Could you please expound for us the impact that this public notice will have on Ugandans living and working abroad?
Thank you very much, Fatuma, for that question. For our dear Ugandans living and working abroad, like we had earlier mentioned, I think both my panelists mentioned the same thing. They are all required to disclose the income that they are earning or sourcing from those places. Because the fact that they are still resident in Uganda, then they are required to disclose and then pay any tax due that has not been paid. So there is no longer the potential or the ability to conceal one's income or one's assets abroad because of this automatic exchange of information that Uganda is party to. So the impact is that now they are required, you can no longer hide your income, you can no longer hide your assets because the taxman has this information available to them. Yes, so I think the time is up for concealing such information.
Thank you very much, Jackie. I'm sure our viewers abroad now have a better perspective and a better view of how this will impact them. Edgar, you work for KPMG, you work with and for KPMG. And in line of your work, as you execute your duties, you advise numerous taxpayers, both individuals and corporate, big and small. In your experience, what challenges do you think taxpayers will face or have faced in trying to comply with this requirement to declare all foreign assets and incomes?
Okay, so thank you, Fatuma. And I'm glad that we're sharing today's space with Michael. Michael did elaborate quite a bit.
Yes.
Because the first challenge that most of the taxpayers, our mutual clients with the tax authorities have faced is context and guidance. And yes, he mentioned that a number of public notices have been issued, just laying out the laws of the land, the expectations that come with that requirement and what they're supposed to do. But the reality is that many of them hadn't read those notices until when they received this, communication in form of an email with expectation to comply within a period of 2 weeks. So for most of them, the question was, where is this coming from? Is it right? Is it expected of me? Is it a new law? Is it a new expectation? Has it always been there? So the first, I would say, challenge that they've faced is basically background and context. And probably, again, to Michael, what they could do a bit differently is that in the communications that go to the taxpayers, a bit of context could be given in terms of the laws which give the background to this a requirement in terms of the communication. Then secondly has been that a few of them, the status has changed, but then the expectation has not gone away. What do I mean? You find that, yes, 2 years ago when I registered for taxes in Uganda, I was resident. I had a contract with, especially, and this I realized was common, especially for the not-for-profit organizations. Of course, last year we all know what happened. So 2 years ago, I had a contract, and indeed, I was present in Uganda. I was resident in Uganda, and that communication or expectation would have been applicable to me 2 years ago. But my contract has since expired or come to an end, or my organization has since closed operations in Uganda. And for some of them that reached out, yes, they had obtained a tax identification number, but no longer are present in Uganda. But then they also did receive this information. So again, the question is, or the challenge for some of them was, okay, I have since left the country, but then I'm getting this communication. Do I still have an obligation, or do I not have an obligation? So I guess there is something there, especially for the non-residents that have been working in Uganda for a while and are living. There is a bit that we need to do differently to ensure that that kind of obligation, at the point when it ceases to apply to them, then it's timely updated into the system, either from the team point of view, such that then those kind of notifications, which are for many of them caused a bit of panic, then do not go to those individuals that shouldn't be receiving them. Then the other challenge for a few that I talked to, they told me, well, Edgar, I think I've actually been found out. So it is true, I was earning some income which I hadn't declared, and now I'm looking at this bill and it's huge. So there is the cash flow challenge or constraint that comes with the fact that it's 3 years, as Michael indicated. So you have to pay taxes for income you earned in the last 3 years, all of a sudden, or in 1 year. Many of them, of course, won't have that money lying around anymore on their bank accounts. So again, the challenge is, in essence, from the incomes that they're having in the current year, then they have to devise means of finding the cash flow to settle the obligations that come from the prior year. So for a number of them, it really was the cash flow constraint. Yes, there was something I didn't do in time, but how do I deal with all of this suddenly now that it has come up? But again, I guess that's the part, as Michael has indicated, there still is an opportunity for them to be able to make a saving from cash flow in terms of a waiver of the interest if that principal amount is settled by 30th of June. But yeah, that notwithstanding, the cash flow constraint certainly does come in. Then the other one, and again, Michael did ably handle, he's given us many options, WhatsApp, online, they even have a desk, is for many of them, where do we go? I need to do this and I know I want to comply. I need a bit of additional information, but then where do I get this additional information? So for some of them, when the notice initially came out was for, well, if we want to comply with this, then where do we go to be, guided as to how we comply with this requirement? But again, Michael has ably clarified on that, because there are clearly a number of options, both for people who are physical within the country and even those who may not necessarily be physically present within Uganda, but then have that obligation. So for the most part, I would say those are the challenges that they've had. And some of the others were, the question was around, do they really have this information? So I had some interesting conversations with some of my clients. Do you really think through that mutual agreement procedure, you think they can really get it? Or how much information do you think they'll get? So, so there is that. But of course, the reality is that many countries have subscribed. And for some, the question was, well, will I be able to get, or what kind of information would they be able to get? How do we corroborate that information? So, I would say that's really, for the most part, where the challenges have been coming from.
Thank you very much. Michael, would you like to come in?
Oh, surely, I appreciate the the insights coming from Edgar, especially from his interactions with the clients, is talk about the lack of information on where to go after getting this email. I got a lot of that in the engagements that I've had, of course, discussing other business, and then people bringing that there is this other thing that I received from URA, and how do I go around it? The URA is doing its best. First, we have built capacity inside the teams that wherever you are reached by a client in any of the offices, you at least know how to guide them around it. Because even in our own internal administration, it's not one area that we had emphasized. And right now we are coming up to say we need to roll this out to see that all the areas where we need to be taxing are actually handled. The other thing is on the online support that is available, because largely majority of the people that we are talking about are able to handle this online using online platforms. So we are also there. But I take the guidance. I hope there can be a discussion, especially on the cash flows. And that's why I was really emphasizing the waiver period that we have. It can have a bit of impact on someone's cash flows if you're discussing with them a liability that stretches to 3 years going backwards. So it is a thing that is under consideration, but let's look at doing right for now going forward. Let's do right going forward as we negotiate the history of our compliance. I think that's the depth. I mean, the effort, where we can put as much weight in trying to guide our clients right now.
Thank you very much, Michael, for communicating the Uganda Revenue Authority's goodwill regarding enforcement of this public notice. We have heard from Edgar, who has interacted with some doubting Thomases, for lack of a better word. We also heard from you, Michael. Yes. You told us that the Uganda Revenue Authority is willing to walk this journey with all taxpayers for as long as they comply. So what then happens in the event of non-compliance? Okay. How prepared is the Uganda Revenue Authority to enforce this mechanism and this requirement that resident taxpayers declare all their foreign incomes and foreign assets? What are there any strategies in place? Are there any cross-border arrangements that you have with other countries, neighboring countries, or countries with a huge Ugandan diaspora to ensure that compliance is for all of us and not just a select few? Okay.
So for the unpaid interest, the unpaid income tax will attract the interest penalty of that 2%. We know how it comes in. And so it's what we would be facing, that we are talking about, that we can circumvent if we are able to take the benefit of the waiver. But in regard to the readiness of the Uganda Revenue Authority, I would tell you, it's as far as 2012 when the URA started discussions with the Global Forum. And it's taken this long journey for us to be accepted into getting onto the convention. And the rigorous process that the OECD takes you through to check the rigor of your processes, your systems, the security, the handling of staff, the information management process is very deep. And so we are ready, and let there be no doubt on the richness of the information that we have. It is indeed rich. All financial information from all these over 125 countries, we can receive it, we get, and it can be used to generate reviews, examinations, and checks in how you have been complying. But like I said, we are already into spaces of complying cooperatively, assisting you and you assisting me to do right, knowing it's not only today's journey, but it's a long journey ahead. And we don't want to be using the harder parts of the law to get us on the right path. We can do right in the simple ways that are available for us. And that's why in the way the URA is rolling this out and in the capacity building that we have had from the OECD teams, it is being guided that we engage more. Assist people, onboard them onto the new compliance obligations that they have, then we will assist them. Internally, we've organized ourselves as the URA. We have been trained by teams from the OECD on how to engage. As a tax educator, I have been trained how to engage on this. All other people in the compliance assistance value chains have been assisted and trained in this. And so we are ready to assist, and we just wait for our clients to reach out, those who have received this information, and we can start the journey.
Thank you very much, Michael. From your elaboration, I can tell that the Uganda Revenue Authority is willing to employ both the carrot and stick method. It is up to the taxpayer to choose which method should be best applied to them.
Yeah, but we've put out the carrot for the first part of the journey. It's way out. It's a very big carrot. Let's take a bite at it.
Okay, thank you very much to our dear viewers. Grab a bite of the carrot before it's pulled back by the taxpayer. Let me now bring it back to you, Edgar. Uganda finds itself in a very interesting situation. You had spoken about experts that come here to work in the NGO space, given our hosting of multitudes of refugees and asylum-seeking persons. So we have many people, expatriates, working in Uganda under that space. Then we also have a second category of persons or investments that are coming into because of Uganda's oil exploration and oil discovery and the whole production process. And some critics or observers have argued that enforcement of this requirement will deter foreign direct investments. What do you have to say about that, given that Uganda, as of now, is a net importer of capital? So we are importing more than we are exporting. What do you have to say about that?
Okay, so thank you, Fatuma. Now, I would look at this twofold. One, this development is not unique to Uganda. It's, I would say, it's a global phenomenon because increasingly, due to a lot of factors, including geopolitics, more especially for the developing countries, I realize that the only way to sustain your development is through domestic revenue mobilization. So again, we are running out of places to run to for those of us that are not as keen with complying with their tax obligations. So this is not unique to Uganda. It isn't an isolated incident where then if you choose to go and probably take your operations to another jurisdiction, then you'll get a lot more favorable treatment as far as that requirement is concerned. From the second perspective, though, again, one of the critical canons of taxation is fairness. And this is to the effect that the tax should be fair, which means that the amount that you're paying is merited, backed by laws that are clearly stipulated. And then also that, you've, as it was said, given unto Caesar what belongs to Caesar. So again, this isn't unique to Uganda. And what I've noticed personally is that for a lot of people to the extent that communication has been made, there's clarity, and there is context giving the background to the taxes that are being collected, then they would be keen to ensure that they comply with the laws of the land to the extent that their business is thriving in terms of the other operations. Now, and the other carrot, as Michael has indicated, that we have, again, looking at this, which I think for me would not be a deal breaker as far as investing in the country is concerned, is the amnesty that we currently have ongoing for all of the taxes that were due as the taxes in June 2024, to the extent that those taxes have been remitted by 30th of June 2026, then one would be able to make a saving in the form of interest and penalty that would otherwise have been levied. So there is a window on the other hand as well. And I think for me, this also is a token of goodwill, just to acknowledge the fact that, yes, could have been errors, could have been omissions, not intended, but you want to do good by the law of the land, then one would be able to take advantage of that, pay taxes, back taxes, without necessarily suffering the extra charge in the form of interest and penalties. So I think that for me is the tax authorities of the government of Uganda really just trying to achieve a win-win situation, that the back taxes have been paid without making it very painful in the form of what would have been interest and penalties being levied. But I think the other very critical aspect as we continue to have these engagements with the tax authorities is especially the utilization of the double taxation agreements between Uganda and many of those other countries where, some of especially these non-residents or expatriates are coming from. So the reality is that, yes, I should have paid tax on this income in Uganda because I was a resident in Uganda. And then, I didn't. But then I did pay tax on that same income in my home country. So the question is, or one of the aspects which a lot of, especially the clients that I've talked to, are looking to see is what consideration will be made for the fact that tax on that same income has already been paid in my home country. I'm able to give you documentation, which could be in the form of a tax credit certificate, to demonstrate and affirm the tax indeed was paid. So what many of the clients or taxpayers wait to see, and I think that for me is one of those where we have a thin line between then the fairness or the wise, is what consideration is going to be made by the tax authorities for the tax that has already been paid on that same income in their home countries. And to the extent that that is taken into consideration, such that we are avoiding the possibility of double taxation, then I like to believe that everyone will be happy to comply with that requirement.
Thank you very much, Edgar, for that insightful discussion. Bring it back to Mr. Masembe.
Yes. Thank you. We are looking at a fair application and implementation of this. And it wouldn't be fair to subject the same income earned to two jurisdictional taxation regimes. I mean, to two impacts of tax. Largely what we've asked for is a declaration from our people on what has been earned beyond Uganda, or as for the residents, and clearly explained by Jackie and Edgar, on the taxability of this income for a resident being all geographical regions or areas. And so we want to be in consideration still of what has been paid away outside Uganda, vis-a-vis what would have been paid in Uganda. And then we meet in the middle on that. So there are international guidelines that really address us on that. And you are professionals, and we are very, very sure that we will treat taxpayers in the most fair way possible. So I don't envisage a scenario where we are going to have a person being taxed twice on the same. But at least where that has happened, we need to be sure that tax was paid on the other side. And then we see how we treat the rest of it within the the confines of the Ugandan tax regime. So basically, that's where it puts us. But we are ready to support, we are ready to engage, we are ready to assist, because first, there ought to be that understanding, because in Edgar's submission, the knowledge gap is one of the biggest challenges that he has encountered from the clients that you represent. And we need to first address that, because tax collected in ignorance is very painful tax to pay.
Thank you very much, Michael, for that clarification. From your discussion, we've been able to pick out that declaration does not equate to taxation here. Mm-hmm. Declaration is simply the first process or the first step in a very long process.
Sure.
Mm-hmm. So we've all heard it from the taxman. Do not fear to declare, thinking that once I declare, there's going to be additional taxes. Compliance does not necessarily arise into additional tax liability. Mm-hmm. Michael, you have hinted on a knowledge gap within our taxpayers and the general public at large. And over time, we have seen numerous URA initiatives towards VAT compliance, payee compliance. We've seen the Commissioner General write in newspapers. We've seen him hold barazas with traders. So one wonders, are there specific initiatives that the URA is considering or that the URA is currently carrying out to publicize this requirement for taxpayers to come and declare their foreign incomes and assets?
Oh, yes, surely. But broadly, I need to say that tax literacy is one of the biggest journeys that Uganda needs to and is embarking on to transform and maybe to fast-track domestic revenue mobilization. Tax literacy is one of the catalysts for informality. People don't know that they need to register and get a TIN. People don't know they need to do this or that and comply with the tax authority expectations. So it is work. You will realize that, and I have experienced, for some of the persons with whom I've engaged, it is actually not been that they are illiterate about this, but how do I go around it? Okay, it is not a strange expectation from the URA, but how are you going to treat it? So the issue has been not about the complete unawareness, but the modalities of rolling this out and implementing it. And the URA is rolling out an awareness program. I will tell you, within the month of November, December of releasing the public notice, our main focus audience at the time was the returning Ugandans, may I say, Ugandans in the diaspora. That has been and we carried out over 6 engagements with these. We are also planning to have virtual sessions still addressing this, and I'm very glad TaxHub has given us the opportunity to discuss this. And also the online material that we've rolled out. We have not yet printed physical brochures or information, but we know that majority of the persons that we are targeting are able to consume this in digital form. That's why our website has been filled with this information on the Exchange of Information portal. This is all there. And we are also going to be convening sessions of the kind with specific target groups in a very, very intensive campaign that will start in the month of March. We'll be starting out in March. We intentionally did not push out this information within the past 2 months because there have been national activities that we wouldn't have wanted to interrupt with an alternative message. But by the time we get into March, there will be an intensive campaign, awareness campaign, that will see this message put across to all our target audiences.
Thank you very much, Michael. To our viewers out there, please look out for URA's information regarding how they can help you with complying with this declaration. I'd like to shift gears a bit to you now, Jackie. We have heard from the URA's representative the challenges they've faced, what they're doing to mitigate them. We have also heard that over 125 countries are implementing this requirement for their resident taxpayers to declare foreign incomes and foreign assets. What does the global space look like? What are the global trends regarding this declaration requirement of foreign assets and foreign incomes? What other countries are implementing this requirement? Do we have any neighboring countries or sister countries implementing the same? And are there any challenges that they have faced during the implementation of this requirement for their taxpayers to declare foreign assets and incomes?
Thank you very much, Fatuma. Like he had mentioned, there are over 125 countries, and I think as of today, there are still more that have ratified the convention to share this information. Yes, we have Kenya, we have South Africa, I think Rwanda as well. Countries where we have DTAs, like the Netherlands, have also ratified this. We have Denmark, Canada. So these are some of the countries that I believe URA in their notice where they say they've started receiving information. It's possible they've already received information from those particular jurisdictions. The trend has been that globally is, first of all, the starting point was there's income being earned in different jurisdictions. And that is why the OECD came up with this initiative. How can we get this information from these different jurisdictions? So the point was to facilitate mutual assistance in tax information, sharing tax information, which in turn results into assessments where tax has not been paid. So globally, there's been an increase in voluntary disclosure, which ultimately, where tax has not been paid, there's been revenue mobilization in those jurisdictions. And Uganda, I think, is going to be one of them that will benefit from that. The challenges have been, one of them, I think, has been on how to collect this information, because there is a standard. There are reporting standards under the law. And most of the institutes that are supposed to get familiar with or share this information were not abreast to the standards. But the standards are there on what you are supposed to provide, when you're supposed to provide it, the due diligence you're supposed to do on the different account holders in those jurisdictions. So globally, yes, but I think it is something that has been worked on or is being worked on. I think he mentioned earlier something to do with training, capacity building, and which definitely has had an impact in those jurisdictions. The information is now readily available. There's a wealth of information, so with bank accounts, the details of where they actually live, their addresses, because all these are provided for in the standard, in the guidelines that such information is supposed to be given. Then there's been, from this information being shared, there's been voluntary compliance. They've been able to manage illicit financial flows. Of course, it is a process. It's not something that can go away just like that. And yeah, there's been an increase in revenue mobilization in the different jurisdictions.
Thank you very much, Jackie, for shedding a global picture of what the situation is like outside of Uganda. Now to Michael. Without sounding like I'm flogging a dead horse, could you please, for the benefit of our taxpayers and our viewers, emphasize, re-echo, restate the consequences, penalties, or sanctions of non-compliance with this requirement to declare foreign assets and incomes?
Okay, I hinted on the waiver that takes away would be penalty and interest if you just clear the principal tax for whatever could have accrued as at 30th June 2024. And therefore, it means beyond that period, the 2% interest penalty that you would have to pay on this would follow. And that also brings onto your door, let's say, assessments, let us say, protracted audit and examinations, which is not... you could apply your time to more valuable activities as a business operator, as a professional. And if this is what you possibly would like to bring yourself to, I think we may need to revisit the choice of what we are choosing. And so my encouragement is that we may not take that path. There is a better, simpler path of making your declaration and flagging yourself. Because I'll tell you, the information that we have can enable us to recharacterize your profile based on the risk profiling that it gives us. And you do not want to be that candidate that we have on the radar for that continued investigation, and possibly we are calling you for clarification. You don't want to get those URA notices and things of the kind. However civil and cordial they would be, you would like to receive another email, I would say, for anyone out there. So we still have an opportunity to do right. And for me, that my encouragement is, let's use the opportunity.
Thank you very much, Michael. I think you have said it all. I have nothing useful to add in that regard. Let me now bring it back to you, Jackie. What role can tax practitioners, both in the tax and audit spaces as well as the legal, what role can they play in assisting taxpayers with the processes of compliance in this regard?
Thank you very much, Fatuma. I think this works for Edgar and I. For our clients, okay, for taxpayers generally. What advice we can give is that it's important, first of all, to understand the legal framework, where this is coming from, why the taxman is requiring taxpayers to declare their assets or income that is held abroad. And it's also important for us practitioners to understand the reporting standards. What are you supposed to declare? What are you telling your taxpayers or your client to bring forth to the URA that has not been declared? And it's also important for the practitioners, once they have interacted with the taxpayers, to understand their residence. I think Edgar talked about this. Are they resident in Uganda? Because that is something that is also confusing to certain taxpayers. Maybe someone is saying, no, I'm not resident, because that's a question. I think that has been also one of the challenges globally. To help your taxpayers or your clients understand their status, whether they are resident for tax purposes in Uganda or not, and whether they are liable or whether they are subject to this reporting that is required by the URA. And following that, it is important that where there's any income or assets that have not been disclosed or declared to the URA, it is important for the taxpayers to disclose this or declare this. I think someone mentioned that does not mean that there has to be tax to be paid. There are instances, I believe, where you can declare and there is no tax that has been paid, or those tax that has to be paid, or instances where you had paid tax abroad and then you're entitled to a credit in Uganda, of course, subject to the limits. So where the taxpayer has given you the information, help them understand their residence status, help them give comprehensive information to the taxman. And this is all intended to help them comply to the notice and also to the law that has been in place since 2023. Yeah.
Thank you very much, Jackie. I'll pose a similar question to Edgar. How prepared are the tax practitioners in helping the taxpayers comply with URA's notice?
Okay. So thank you, Fatuma. I believe, and we, the tax practitioners, have a love-hate relationship with the tax authorities. But we've over time realized that we're on the same side, although we may have varying views on certain occasions. So we have actually had quite a few interactions with the tax authorities themselves to ourselves provide context, because the reality is that my client will come to me and they expect me to know. But then the tax authorities, in this case, URA is the author of this communication. So we've had a number of conversations with the tax authorities, and to be honest, they're always willing to share, to provide us with context, because they know that the more they're able to share with us, then the more context and clarity we can provide to our mutual taxpayers or clients for them to be able to comply with the obligation as we're providing the service. So we've had a number of engagements with the URA. We have also shared our views and opinions in terms of the challenges that taxpayers are facing with complying with this requirement, and some of the aspects of what they would want to see be done differently, or probably communicated a lot more timely subsequently. So we have both gotten more context from the tax authorities, but then also provided them with information as to how to make it a little easier for these, our mutual clients, to be able to comply with that requirement. But on the same vein, we've had to go back and review a number of, especially the double taxation agreements, because for a number of clients, they want you to cast in stone. But as we were saying, now that I paid in India, assure me 100% that I won't have to pay in Uganda, which assurance, well, you can only provide after you have educated yourself. So we've suddenly had an opportunity to reflect on the double taxation agreements as well, just to confirm what it really means as far as the payments that have been made in the other jurisdictions are concerned. But then we've also been able, for many of the clients, been able to just get a bit of time for them to be able to put their affairs in order so that they can make the correct kind of declarations. So we've, one, educated ourselves. Two, we've also educated our clients, because we realize that the more they understand, the better the quality of information, then the better the quality of the declarations as well that are being made to the tax authorities, and then the easier we're able to assist them to comply with this requirement. So the truth is that I would say we haven't really had many cases being handled conclusively, because this is a fairly recent development. But along the way, we expect to learn from the engagements that we'll have with the tax authorities to try and see how do we make it easier, how do we make it better, and subsequently going forward, as Michael mentioned, as the compliance going forward, it's a lot easier for the taxpayers to be able to do. And that way then would all be happy, where the taxpayer is happy because they know what they're expected to do. The URA is happy because the taxpayer is doing what they're supposed to do. And then we, the tax advisors, also are happy because we have made the URA happy and our client happy, and the client is going to make us happy as well. Yeah, thank you.
Thank you very much, Edgar. Okay. Edgar has closed us off on a very high note. Okay. But before we say our final goodbyes to our viewers out there, I'd like to get some parting shots from you, our dear panelists. I'll start with Edgar, then Jackie, and lastly, but by no means least, Michael.
Okay. So thank you again, Fatuma, for hosting us. For me, my parting shot to our viewers and our taxpayers is not to be afraid. Engagement with the tax authorities is critical. And we also have the assurance from them that they are willing to engage. So it's critical to engage. Do not pay the tax unless you're sure that it should be paid. Engage with the tax authorities. Get context and clarification where you need it, such that you're comfortable with what is expected of you, and then you also pay just the right amount of tax.
Thank you very much. I'm sure our viewers have taken note of that.
Okay.
Jackie?
Thank you very much, Fatuma, and for hosting us. This regime, first of all, I think we've all said, is more about transparency and compliance by taxpayers. I believe the taxman is not trying to punish the different taxpayers. So compliance goes a long way in saving the taxpayers from all these penalties and interest that can accrue from the undeclared or undisclosed income or assets. So we encourage taxpayers to heed to the call by the taxman and comply with the requirements.
Thank you very much, Jackie. Michael?
Well, thank you. It's incumbent on the URA to administrate on the tax regime in the fairest way possible. And I would like to encourage our people there that they should have the confidence in the treatment of this. Declare your information. For right now, we have a voluntary disclosure window where a waiver exists for whatever could have been due by 30th June 2024. Let's use the most of it. We have until 30th June 2026, which is 5 months right now, to use the window, and we can set the record straight going forward. For whatever could be in the history of our compliance, we can address it retrospectively, but at least let us set our next steps right. For compliance is a journey of two, you and the taxman. Thank you.
Thank you very much, Michael. This brings us to the end of episode 12 of the Tax Hub podcast. And we as the Tax Hub podcast are eternally grateful to you, our dear panelists, for making the time to come and share your insights with our viewers. Mr. Edgar Mukasa, thank you very much for making the time.
Thank you.
Mr. Edgar Mukasa, as earlier mentioned, is an associate director at KPMG. Please send our regards to the entire KPMG family.
Okay.
Miss Jackie Aturinda, thank you very much for coming to join us here today. Ms. Aturinda is an associate partner at Birungi and Barrett Associates, one of the oldest and leading tax law firms in Uganda. Our regards go to the entire BBA team. And lastly, Mr. Michael Masembe. Mr. Masembe is a manager, tax education with the Taxman, Uganda Revenue Authority. Thank you very much for making the time. We're eternally grateful to you and the entire URA management for always heeding to our call whenever we request that you come to educate our taxpayers, our viewers listening in and viewing us from home. I would also like to send our enormous appreciation to Onomo Hotels, located here at Akibua Road in Nakasero, for providing us with this very beautiful ambience. Please do not forget to subscribe to our YouTube channel. This episode will be uploaded thereon, just as all other previous and subsequent episodes. Please interact with us across all our social media platforms, Twitter, Instagram, TikTok, everywhere. We are everywhere, and we can't wait to listen in, to hear your feedback regarding our podcasts, the topics we bring on, the panelists we host. I remain Fatuma Ramadan Nabulia. I'm a tax associate at H&G Advocates, and this was episode 12.